Single-family homes in Calgary are seeing some small declines as we progress throughout 2025. We started off the year with a bang, and then we're now noticing some slowdowns, most likely going through 2025 all the way into 2026. The real interesting fact is if it's going to continue on through 2026. So let's dive into it. Now, my name is Adam Fyfe, your Calgary real estate agent. Now, if you want some information, go ahead and click the links. There is a lot of good information for you for free to browse. As an example, you want to read these PDF reports? Go ahead and click on the links there. They are edited files. You want to go and look at some data together? Go ahead and book a call. The link is in the description. You want to know what your home is valued at in today's market? Yes, we are seeing some slowdown, but not every single quadrant is seeing the same slowdown. So there's a lot of good information there. Go and click it. It is for you to consume. So let's read what the Calgary Real Estate Board has written about this market, and then we're going to try to dissect it. For the first time since 2020, the months of supply for detached homes rose to 3 months. Sales activity slowed to just over 1,000 units in July, while the number of new listings, despite being slower than last month, was still nearly 10% higher than last year's levels and above long-term trends. The wider gap between sales and new listings led to a significant adjustment in inventory levels and slower sales. The months of supply rose to 3 months. Sorry, I messed that one up. However, conditions did vary significantly depending on location. The Northwest, West, and South District, the months of supply remained well below 3 months, whereas the Northeast reported the highest months of supply at over 4 months. A shift to balanced conditions has taken much of the pressure off home prices. As of July, the detached benchmark price was $7,800. Oh my gosh, I can't read today. $761,800, down less than 1% over last year. However, there was a significant range of price adjustments. Both the Northeast and East districts have reported the largest declines in price at 5%, though prices still rose in the city center by nearly 2%. Now, the problem with trying to record these all in one take is that when I screw up, I just have to keep going. So thank you for listening. Let's go to the next one here. Now, this is the kind of the entire city single family homes chart. I like this chart because there's a lot of great visuals here. So you can see that the sales, right? So in Q1, Q2, we did notice sales pick up, as the year progressed, as well as the inventory also picking up as the year progressed, meaning that there was more new listings come to the market than we've seen before. If you actually look at the sales compared to last year, we were within that same kind of what would you call that? That same type of movement. Like there was the similar amount of activity in our market. And I spoke about that in Q1, Q2. There's the same amount of activity, but we're noticing more listings. Now it's slowed down where the activity has slowed, but the actual new listings have increased exponentially. So we've noticed a slowdown in the market as well as an increase in new listings, but the pricing has stayed relatively stable. Relatively stable. Yes, of course, we're seeing some price declines here. Don't get me wrong. $2,500, $3,000, yes, there are declines. They're small declines. It's slower, but we are most likely going to notice that going throughout the rest of the year. You can see last year, we noticed the same thing. It's pretty common in Calgary over every single year to see increases in Q1, Q2, Q3, Q4, we start to slow down. It happens every single year. This year just might be a little bit quicker than what we've seen in the past. But again, we need to break it down into the quadrants, into the different areas. So when we try to take a peek at what's happening in this market, we've got month versus month this year and last year, and then we have our year-to-date averages this year and last year. So take a moment, you can kind of pause it here and look at it. Some of the cool things to notice is last year, right? 6.3 billion versus the 5.8 billion that we saw, right? That is pretty crazy. That's a huge difference in the market, right? We're down significantly in sales, almost 1,000 sales different, and we're increased by over almost exactly 2,000 new listings. So we're down 1,000 in sales, and we're up 2,000 in new listings. Inventory increased pretty exponentially. You can see here, again, this is just the year-to-date average for inventory, right? 1,300 versus the 2,400, right? Just for the month of July, right? The month of July, we had 3,000 leftover single-family homes, where last year we had under 2,000. Right? Months of supply, obviously we're starting to notice a slowdown here. Like last year, again, year-to-date average is 1.23. Hot sellers market last year. This year, a lot more balanced, right? 3 months, still a balanced market condition. Obviously, we're seeing some massive decreases in the Northeast, and we're seeing some smaller decreases in places like the Northwest, right? Sales to new listing ratio, 55%, right? Significant decrease from last year at 73%, right? Sales to new listing price, we're at 99% for the month. We're at 98% for the year-to-date average. We're at 99 days on market, and then price point we're going to touch on a little bit more in future slides. So where are we at, right? Sales, we're down, right? You can see a fairly consistent drop. Last 2023, 2024, we saw a lot of activity, right? 2021, 2022, it was just off the charts, right? Our benchmark price was like 500,000. A lot of people started that initial wave coming to Calgary. We saw a lot of activity. Now we're starting to slow down. Now we're starting to notice that people are a lot more hesitant to buy our homes because they are very expensive and the interest rates are a lot higher, right? Naturally, we're going to see some sort of declines, right? We're at like 3.5%, 4% for interest rates, and our home prices are like $200,000 more than what they were, right? When you start to break it down, you can start to see some different price points here. Again, looking at those blue and green bars, right? If we look at just these last few years, right? The blue and green from 2022, 2023, look at how many homes were sold in the 400s and 500,000s in 2022, and even in 2024. The 600,000 in 2022. Now we're starting to notice a huge shift, right? It's crazy to me that we're still seeing an increase in the $1 million plus, right? So the ultra luxury, right? They're still seeing their fair share of activity. And I've even saw quite a few homes that go on the market pretty well priced, still going pending within that first week. You know, we're talking 1.1 to 1.6, right? If they're priced well, they're still moving pretty quick. Now, we are noticing that slowdown. So again, just kind of going over that here. Pause if you want to look at the exact numbers, but I'm just going to skip past it. So kind of breaking it down, trying to look at where these sales are in the city, right? The southern quadrant is always the biggest, right? We're always noticing the most activity for single families, as well as city center for apartments. We're always seeing the most amount of sales there, but fairly evenly distributed throughout the entire city. Now, new listings. This is where I want to spend a little bit more time. New listings and inventory, right? We are noticing a increase in new listings, which is above the 10-year average, which is great to see. We're at more of like that average kind of what we would typically see for year-to-date average in new listings. So are we, going through the roof of new listings coming to the market? No, but we are coming back to that normal that we've seen over the last little while. We also need to remember that there's a lot of new construction as well that does not come up on these reports, right? So we are back to 2015, 2018 levels, which is great, but we're probably going to see more new listings come and naturally grow as the city grows, right? So this was an issue for the last few years, right? 2023, 2024, there just wasn't anything to select from. So the homes that did come on the market were heavily targeted with multiple offer situations, increasing that price point. Now, buyers have options. So take your time, do your research, and find homes that actually fit, right? So when we break this down into a little bit more of a numerical style chart, you can start to see a couple of different things, right? So the sales, right? So we got July, right? This year, last year, this is just a direct comparison from the two, right? You got 10 more days on the market, right? Last year was 767, this year is 761 for the benchmark attributes. But like mentioned, always, you want to make sure you know what those benchmark attributes are. The link is in the description for this. You can go here. You can see what those attributes are for detached homes in individual quadrants and communities of the city. So you can see the attributes are down around $7,000 to $8,000. The median price is actually the same, and the average price is roughly the same, right? $803 versus $799. That's fairly similar to what it was last year for the average price. Now, what's interesting is when you start to look at, the stability that we did have in the first section of the year. Right? We did have some stability, and now we're starting to see some drops. And again, if you look at just historical data, right, and you look at what happened last year, even though last year was a fairly hot year, we still saw almost $15,000 to $20,000 decrease from July going all the way to December. It's probably going to be the exact same thing, right? We're probably going to see some decreases going into the rest of the year because it happens every single year. The interesting part is how much percentage are we going to see, right? We have stayed relatively stable-ish for the single family home market. Now, I know a lot of people comment, writing's on the wall, and it is. But Calgary, single family homes have stayed fairly persistent throughout this past 12 months, like this 5 years, really. But either way, we are noticing a big change. Now, the big change comes from the amount of new listings coming to the market, right? A lot of people are offloading those homes, not too many investors, but some people are, it's hard to say actually for the demographic. I should look into that. There are a lot of people that will be offloading their homes because there are mortgage renewals that are coming up from those ultra low rates. They've made their money. They've increased by like $150,000. Now they could probably make a move if they want to, right? Rather than renewing at these higher interest rates, why not make your money and run? I've noticed that. I've had past clients talk to me about that, and there's a lot of people doing it. Now, you just have to be a little bit more cautious when you're putting your home on the market, just because there's a lot more selection for buyers. You can't just be shooting for those high price points unless you have some very unique features and benefits and values for your property that's going to help it stick out, right? Because when you start to look at the inventories compared to last year, right? You know, you had a 22 versus a 1100, that's double, right? You had a 25 versus a 12, that's over double, right? 16, 30, right? There's almost a double again, right? So we're seeing a lot more inventory, which is welcoming news. This is welcoming news. I don't know why so many people think like, realtors just want this market to blow up and they want it to blow up forever. No, that's not the case, because it's very stressful for everyone, and you can't build your economy on housing, even though Canada has literally built its economy on housing. We're going to see these massive shifts, these massive ups and downs coming to this market because of the amount of investment going into housing. I actually had a video back in like 2021, talking about how the pandemic, when they printed all that money, where did half of that money go? That half of that money went into housing. With the ultra low interest rates and the affordable homes at the time in Alberta, they had a lot of investment going into the real estate market, and now that investment is being pulled out because a lot of people put their money in low interest rates and now they're backing out. Makes sense to me. So let's kind of move on. I'm ranting now. You can see a progression of increase for the months of supply. So again, we did stay relatively, stable-ish, right? Yes, of course, if you look at the line, you can see obviously the line's increasing, but it was a slow progression. It wasn't any shocks up, shocks down. Now we've broken free, and I would imagine we're going to probably live here, especially with a few of the quadrants being as high as they already are for months of supply. It's going to pull that number up, and we'll talk about those communities in a second. All right, we'll just talk about them right now. So when you look at the months of supply, right? 3 months, 4 months, typically a balanced market, right? 4+ buyers, 2.5 under sellers. Just a rule of thumb, right? Now, when we're starting to look at this, it also depends on, did it go into 3 months or is it coming out of 3 months, right? There's very big differences there, but we can see that the city center and the Northeast are at 4 months of supply. A lot of inventory in those markets. You can still see some other markets still in sellers condition territory, right? You've got your west, your south, and your northwest still in sellers territory. Now, that doesn't go and mean you get to make your $1 million and put your home up for whatever it is that you think it's worth, and then you're probably going to get that. It just doesn't work like that, right? When you go to the market here, we do need to be careful as to what your expectations are, right? So all I've done is I just put in 2 very basic searches, Northeast and Northwest. And it is pretty cool to see the difference between the 2 communities. One's a little bit more sought after, one has a little bit more of inventory, right? So you got 529 units here, and you got 829 units here for Northeast. So there's quite a huge difference in terms of the amount of homes. Plus, the Northeast is seeing a lot more new construction than Northwest, which also puts pressure on prices, right? So if we look at here, we go to the Northeast, right? And we're not going to spend much time here, but this is what we do for consultations for clients, right? We look at this kind of data and we narrow it down. We try to niche it into something that's a little bit more impactful for you, the person who needs to know this information. So this first search, we got 200 units, right? So you got 1 pending here, and all we're doing is we're just looking at what has been most recently listed. So you got 1 pending here, scroll down, you got a couple pendings here over 5, you got a 6-day here pending, you got your first sold in Rundle, right? It was obviously a very affordable home, unconditional offer, another very affordable home, unconditional offer, or very short conditions. So you got 2 sales here in the last, let's call it 10 days. A couple more pendings, a few more pendings here going into 2 weeks. Now you got your 3rd sale, right? Mayland Heights, again, more affordable property, right? Going down here, Marlborough, again, more affordable property, right? Now you go in here, Rundle, and a little bit more of an increase over the last 2 weeks. So you're starting to see, a couple sales, a few pendings. Now, Northwest, fairly different, right? You go down here, you got some pendings, you got a bunch of pendings here, you got 1 here. Again, Northwest, 0 days on market, sold, 96% of list price, it was $1 million plus, right? You got a more affordable property here that's sold over ask, 103 in bonus. It was a 602. That was most likely going to be some sort of flip where they're going to actually rip it down and put some fourplexes up, right? You've got another sold, some more pendings here, a lot more activity, more solds, more pendings, right? 3 days on market, again, unconditional offer most likely. Again, over list price, 4% over list price. You got another one here, 2 bang, bang, both at or over list price, right? Very different scenario. All I'm trying to get at here is that you cannot watch my videos and you cannot say Adam thinks one thing or another, because it is very different depending on where you are looking in this market, right? So we need to break it down, and that's where you need to have a consultation. So year-over-year price growth, right? You can see West saw a percentage increase, which is crazy, right? And you're still seeing some modest 0.5, 1% declines, which again are really nothing in this real estate market. When you start to get to the 3, 4, 5% year-over-year losses and those stay consistent, that's some big news, right? Look at the apartment market. Look at how much losses are in that apartment market right now. Semi-detached, this is not the semi-detached video, but they're also seeing some increases in this market, right? So what does that mean for you? What is your home valued at, right? You're curious, you want to know, scan the QR code. It's cool. Myself, Christian, we're probably going to reach out. Hey, what's going on? Oh, you're just kicking tires. That's cool. You know, you want to pull some equity, or you want to, find a professional to help you out, get a refinance or whatever, right? Whatever the case is, we're here to help you. This is a non-pressured sales tactic, right? We're just trying to provide some services and some value for you to make some sort of decision, right? The link is in the description. Go ahead and click it. So let's start to break this down, okay? We're gonna wrap this up. So this is a breakdown of the entire city. You've got your city center, your northeast, all the way through all the quadrants. So this is a pretty good highlight as to what's happening in the city, right? You can see lots of red, lots and lots of red, especially for those places that have seen double red, right? You look at West. I think I said on the previous one it was West. What's going on here? Actually, there is a problem. I just noticed that. So it says in this chart here that West saw is this total res? No, it's not total res. West has seen an increase of 1%, but that is an issue because West, year over year. My bad. These are month over month. That's year over year. I had a brain fart there. But month over month, you can see 18,000 and 7,000, right? That's some pretty big losses, right? When you're getting up into these higher price points, obviously there's going to be a little bit of a bigger swing. This number actually hit 1 million 2 months ago, and that was shocking to me. I did not expect to see that, and I think it was June's update that hit 1 million, and then it very quickly came down to 983. Now, we are seeing some increases in some areas, right? Again, $1,800, that's nothing, right? That's nothing. $600, that's nothing. $500, that's nothing, right? $3,000, yeah, okay, you're starting to get up there. $7,000, those are pretty big losses, right? Those are some noticeable changes that the community is seeing, those quadrants are seeing, but now I need to break it down into individual communities. Just because the Northwest saw an $1,800 increase doesn't mean that every single quadrant is seeing an $1,800 increase, but we did notice like 3 sales within our very fast search that all sold over list price, right? Now, they are at 70% sales to new listing ratios, right? 144 sales, 205 new listings, so they're still very active, right? But you're looking at other places like Northeast, right? 122 sales and 290 new listings, not even including all the new construction going on in that area, because there is a lot of single family homes going on in that area, yet they stayed flat. There's only $500 decrease there, right? Which is virtually flat. Looking year over year though, it's a pretty big difference. That's a big difference compared to a lot of other communities, right? And even East, which is actually surprising to me as to why they're seeing such a decrease, because I don't think East is really that bad, to be honest with you. I know that there's a lot of people that might think differently about the East Calgary. It does have a rap or a record for certain things, but I mean, it's fairly affordable. If you're coming here and you want a single family home, $500,000 is still fairly affordable for a lot of people out there. And you can get a half decent house in a half decent area, but they are seeing some pretty gnarly decreases over the last little while. So I am surprised to see that. So where are we at, right? We're in the negatives. We're probably going to stay in the negatives for a little while. We're going to most likely ride this down. So if we actually go back up to this chart here, right, and we start to look at what has happened over the last little while, it is fascinating to me to see where we might end up, right? Next month, we're most likely going to be under 762 because we're already at 761. So we're probably going to see a negative next month. Then drop it down to 557, 757, 753, 750, 747. Like, how far are we going to go? Like, we were all the way down to 723 in February, right? Then we shot right back up to 767. That's going to be fascinating to see what happens next year. There's a lot of things at play right now. There's a lot of tariffs, election results. There's a lot of different things happening in this market. We're built on some interesting things in our economy. We're still doing fairly well. As an Albertan economy, we're doing fairly well. But there is a lot of factors being put into play as to why people are holding off, and I totally get it. I don't think we're going to see any sort of rate movement in the mortgage world anytime soon. I'm not a mortgage professional, don't ask me, but I don't think we're going to see too much rate movement because I just don't think that our economy is showing any signs of strength yet for them to really consider that, but we'll see. So we're probably going to see some decreases. We're probably going to notice that throughout the rest of the year. It doesn't hurt to continue to look. If you need a house, if you're looking for your primary residence and you need to move into a home and raise a family and you're renting, yeah, it still makes sense to buy real estate, because at the end of the day, it's a 10-year plus plan. Too many people look at they look at real estate as a quick flip, quick income producing thing. It's not. It's a long-term plan. Homes should be bought for so you can live in them. Yes, there is very good investment opportunities for those of you who have cash. But when you have that amount of cash and you can get away with lower mortgages, sometimes it just makes more sense to get dividends and not worry about the headaches of the real estate market. Too many people are looking at the real estate market and investing in it when they don't know what they're doing, they don't have enough money, and they don't even live here and they don't have the connections. It's ridiculous. Those people are going to get burnt more than the others who save their money, buy the homes in the local neighborhoods that they live in. They can care for them. They can actually do the right things and increase their values and make sure that their tenants are taken care of. So if you have any questions, I'm more than happy to help. I'm more than happy to give my honest opinion on things. Yeah, sure, I haven't been the perfect in the past. No one is, right? When no one saw any of this coming, and I'm not going to mention the two things that people like to comment that I say too much about what happened in this real estate market, but no one saw it coming, right? Q1 was still fairly strong. Q2 held up. Q3, obviously we're seeing some slowdowns. Q4, most likely going to see some slowdowns as well. So I'm ranting on. If you have any questions, just comment them. I love replying to them. It takes me a couple days to get back to you, but at the end of the day, it's all about a conversation and trying to build that trust. So thank you very much. I hope this makes sense. If you have any questions, you never know. We'll be in touch. Peace.